We're not recording. So here's the pattern. Price goes like this, takes out liquidity, then breaks. Okay. So if this price is happening in a bigger time frame, let's say daily, we're looking at it in a daily perspective, then we are seeing price doing this, doing whatever it wants, then it goes to the order block. Okay. If it's daily or H4 order block, we don't enter there and then. Okay. We need to see some form of liquidity being taken out. Here, return to the order block, test the order block, then we shoot. Okay. And this kind of setups and this kind of things that we're looking at, they need to be part of your trading plan. This is a common setup. It comes in different variations, but it's up to you to know that this is the kind of a thing that I'm looking at. It comes in different variations. Sometimes it's like this, sometimes it's like this, sometimes it's, I don't know. It just comes in different variations. The key main point should be what was actually happening here. You saw big liquidity being taken out. After liquidity has been taken out, breaking market structure, confirming that liquidity has been taken out. After liquidity confirmed that it has been taken out, you want to come back. This could be the H4 order block or the daily order block or even the weekly order block, which gives me our POI, what do you call it? The supply. This can be our supply zone. So whatever reason is going to give us for entry here, we'll have now those patterns that we can use. It's either we can have the QML fractal type of a pattern, and that QML fractal must confirm what? The break for it to qualify. In this same zone, you can have those other type of patterns that we looked at, the equal highs. We can have, instead of having this, we can also have equal high, liquidity grab, then return to the order block, then shoot. Within this same supply zone, we can have, what do you call that one? The one that we have liquidity taken, SMS, return to the order block. These are going to be part of your reason for entry. When you reach your supply or demand zone, okay? So those are going to be your reasons for entries. So this is how I was looking at gold, and this is the pattern that I was looking for. Then if you're viewing things like this in a smaller time frame, sometimes you might not get a pattern like liquidity taken previous months, previous days, previous week being taken. Sometimes you might find a situation where price will just make an SMS, not return to the order block, but instead it dances for particular days. Then later on, it reaches that's when it wants to shoot. But immediately it reaches that area in that kind of a manner, your focus now, your prime focus should be, how is it performing when it reaches that type of order block or our supply and demand? So we're going to look for those patterns that we can find. Pattern will be the pattern. The overall, the bigger time frame, we're looking at this. But what are we going to do when we go in a smaller time frame? So we looked at this price. We had equal highs here, which gave us good confirmation that price actually might actually pierce through to clear out liquidity here. And this type of a pattern that we got a pattern for something like, as you can see here, if we go here, this was a previous day. Okay, this was a previous day, and it was taken. After this previous day was taken, price broke through, and at some point we got the test to the order block, and it was a shoot. But after price broke through, price left us with an order block which didn't come to mitigate. So meaning we expect this in a bigger time frame to be our supply area. Does that make sense, guys? Can I get a feedback? Can I get a feedback if you're following?
Yes, you are following.
Okay, great. So after this, After this, as we're not going to enter just there and then with price which is there, if it was to pierce here, if it was to take out liquidity, at least let it touch this area. This will be our point of interest for our supply zone. Okay, we're not going to enter there and then. At least we should see something like this. That's when we'll find ourselves in the market. Okay, so our target area that is going to be, that is our prime focus to be taken out, will be this high. So let's see if this high was taken out. So, okay, we saw a big move for that particular area, killing out these highs, confirming to our pattern in a bigger time frame. We saw this, okay? After seeing this, our prime focus now was to say, if this price will pierce through here, I want to see yesterday taking liquidity take in this, or those other patterns that we drew from our previous session. Okay, so after seeing this, let's go to H4 so that we start looking for those kind of scenarios and patterns. So we saw this shoot more like a what? More like a stop hunt. So let's check out what our price did here after the stop hunt. Okay, so as you can see, for that particular day, price already has given us something like liquidity, again, equal highs, okay? We see equal highs, and these are areas that we are likely to what? To enter the price. Any moment here, we might find ourselves in the market. So anytime here, we might find ourselves in the market. So I looked at this. How am I going to capitalize from this guy here? Again, we have put our supply here, and it has not been mitigated. Order block, our daily order block on top, it has not been mitigated. And we have got equal highs that have just been created here. What are we going to do? We put them there. Okay. Now, the pattern that we look for will be this one. Price, equal highs, liquidity tech, return, then like this. Okay. If we see something like this, and the break should be clean again, then we're going to take advantage of this trade. Okay. After looking at this, let's see. Okay, we had a first shoot here. Equal highs being taken, and we're testing now our demand. But for these equal highs to confirm that actually these are equal highs, we need to see a clean break in market structure shoot to the downside. And that is going to confirm for us that this is actually a clean a liquidity graph. Okay, shoot. Price didn't give us a clean break in market structure to go to the downside. Instead, it actually pierced through more to give us a signal to say price is actually trying to mitigate even more. And what happened here? The same scenario, are you seeing that the same repetition, that like Forex is a repetition? Did you see when we tried to backtest on USD card? Is it not the same scenario that we got from USD card?
Yes, yes,
It's a
yes,
similar,
exactly.
it's the same thing, different days. The USD card performed this similar setup last week, and it's the same thing that we are seeing here. We didn't get a clean, in USD card, we saw a good clean break in market structure to the downside, but it gave us equal highs to show us that we are still going to pierce through, and it did. And for God, it gave us this, okay? So we want to see if this is truly a good order block daily that market can react on. We should see a very good clean break in market structure, at least with a void for us to find ourselves in the market. Boom. Did you see this? This is the kind of a break that I would look for. When I see something like this, good clean break in market structure, and I can go now in 1 hour to check what is happening. If I go in 1 hour, another scenario here that I can take will be this. I'm seeing a pattern like this now. Okay? The pattern that I'm looking at is previous day high. Liquidity has been taken, and I'm seeing a good break in market structure. The pattern that I'm looking at will be that one that only has a QML fractal kind of a pattern where yesterday has been taken, grab, then break in market structure, then return to the order block. Okay, let's see. Is this clean? Is this something? Is it something that we can look at? Let's see how it's going to play out. Okay, in this case, we're going to look at things in this way. Okay, let's break this down. Our order block in this case is going to be this guy here. You see, because this was the last candle before this break. But you will notice, okay, I'm getting this noise. Let me mute you all. So this is the order block, the last candle before that break that will focus on. But you will realize this is what happens, okay? This is what happens. Let's take our Fibonacci, let's put it about there. And this is the first low, clean low that we are getting. And this is where price is. This is what I was telling you that sometimes price might be not on the order block, okay? Might not be on the order block, but instead price might be just here, or like the OTE might be just here, not within the order block. So me, I like to take trades when price is in the order block, but sometimes price might turn here. The only thing that is going to make me enter this market in this case will be if I see another yesterday liquidity take, break in market structure, then return to the order block. That's when I'll enter. If I find another pattern within this other pattern, then I'll enter from somewhere here. And again, I'll test it with the same Fibonacci and find myself in an entry, because in this case, the chances that it might reach here, it's a 50-50 thing. But my orders will be here, waiting for me in case market taps here. But the reaction that I'm going to get within here, again, will make me to give it another approach. Okay, so let's see how it played out. Okay, so I got missed by just a few pips for me to find myself in the market. So those who entered from what? From 70 were already in the market. But for me, I don't want to risk a lot of trades, because if I was entering from here for this pair, if I was entering from here, it means my stop loss will be somewhere here. And this is a lot of number of pips. So I would prefer I try to work around this area and see how best I can capitalize. Let me check what is actually happening here. If I zoom in here, if you have realized, you will discover that price actually made equal highs. Okay, the previous day, this is another day, price made equal highs. And what pattern are we getting from here? We're getting a pattern which is this: equal highs, liquidity grab, stop, return to the order block, then shoot. So we're getting a pattern like this. And we become a little bit excited that, okay, after this pattern has been taken, let's see if we can get a clean break in market structure here, because this is more like liquidity taken yesterday, equal highs taken. Then let's see if we can get it. We go in a lower time frame. Okay, after going in a lower time frame, what are we seeing? We're actually seeing a very good break in market structure here. Okay, not only seeing that, this pattern structure has changed. The pattern that we're looking at here, if you were to visualize it nicely, will be a pattern like which one? Will be equal high, equal high has been taken, then price is failing to beat high. Now this pattern has changed to something like this. This is what I'm seeing here. So upon seeing that market structure here, okay, here, okay, here, okay, return to the order block. So I would like to see price returning to the order block. That's when I find myself in the market. So where is going to be my risk? Okay, this is what I'm visualizing. You have visualized, okay, this is a clean breaking market structure. Price telling me that after liquidity has been grabbed, actually I'm seeing price failing to continue going up here, which makes this guy to be my last candle before the shoot. So this is going to be my OB, my new OB that has been formed. Okay, after seeing this, let me delete some of these things so that we get the clean. Okay, we can further refine this if we can get something. Oh, boom. Actually, here, after this break, even before this break, if we go further, you will realize that there was a good clean break in market structure here, and market returned to the order block, and this was the shoot. If I go in 5 minutes, if we were to take it in 5 minutes, you realize that actually there was a good clean break in market structure. Last candle market test, this was a shoot. Break in market structure, another order block. So these were good small order blocks that were there in smaller time frame that could have given us a trade, just like that, and so on and so forth. And we could have started paying ourselves. If you're a scalper, this is what you could have been looking for. Okay. Shoot. See, this is the order block that we were looking for in 30 minutes. Then if we were to refine it in 15 minutes, it could have been refined like here, which is making our risk to be very small in this case, which is very good. Then because we have an SMS here, like we said, we said if there's an SMS, at least your risk should be a bit up to avoid getting cut out. Okay, the first payment should be the first low that was created here. Where is your order block or your Fibonacci? The Fibonacci now is going to be first low again. Okay, as you can see, it's 79, 79. It's the same scenario that was happening in the bigger time frame. This is what we're getting here. So what we're going to do, we're going to put our limits here. This was where our limits are supposed to be. Then first payment, second payment, then in a bigger structure, the last payment should be here, because the bigger structure is telling us price is likely to go. But to secure your loss, the first payment has to be taken so that you pay yourself, then later on you go on. So the structure and the pattern that we're looking at in this case is this. Okay, let's shoot. Boom, first payment has been triggered. Second payment has been triggered here. Okay. Okay, so here, as you can see, this was a good second entry here. After the break of this void, there was an order block that was not mitigated, so you could have catch a good another entry that you could have taken advantage of. But again, for you to get a good entry, you needed something that I can, let's say the Fibonacci. What is my high? Okay, if you are going a smaller time frame, there's a high here, but you could have put another high there. So you and me, most of the times we take our trades when price, which is our order block. So our second entry couldn't have been tapped But if you could have taken your trades at 79, in this case, you could have been tapped. If you use a broker like my broker just touches, kisses, and goes to the other side. Okay, so let's see if we're going to reach our target. Okay, so this price went up again. Okay, shoot again, played there, played until the target was met. Everything was okay just by following those simple rules, straightforward patterns, and there you go. You have a good trade. You have paid yourself. Everything was secured. If you are looking for another entries, you could have looked through your reasons for entries here. But this is how you catch such moves, and those big moves until down there. Then the overall again that you can say, okay, if price pierced through here, since if provided that you're still in the market, or you're still holding trades, or you're still paying yourself, you've left yourself with the last payment, your target should be the last order block before this imbalance, which you can be pretty sure to say price might come back and fill up this gap here. And obviously it would have been a good trade. And that's how you use these patterns to clear up your reason why you enter trades. Any questions?
No question.
Okay, Mr. Msonda, make sense?
Sure.
Mr. Msonda. Okay. Sorry.
No question.
Okay, so that's it. That's all we had for you for this segment of the trading entries and pattern as we are concluding the bootcamp. And I hope you guys have learned a lot, and hope you guys have got reasons why you should find yourself and how you can apply these patterns we see every day in the market to our trading plans, and maybe you can use them to work around the market. Thank you very much, guys, for joining this segment, and I hope to see you on Wednesday as we conclude the bootcamp, and I hope you have learned one or two. Have a blessed night, and bye-bye.